Companies involved in alternative sources of energy, clearly been a hot topic for some time now. Plug Power is no exception. We saw its stock trade as high as $75 in January, but since then the story has been somewhat different. So given that they're now down by more than half, is this a buying opportunity, or are we set to see more weakness still for Plug Power? I thought it'd been interesting to take a look at these, considering just the volatility we've seen. If we went back to last summer, the stock was trading around $10, then runs up briefly above 75 in January. And since then into May, it's been pretty much one-way traffic for Plug Power. We've seen that the stock decline fairly steadily. I'm wondering if the moves we've seen over the last couple of months are the signs of it trying to build a base down here, trying to build a recovery. At the time of recording, it's getting hit quite heavily again. It's off about 20% over the last week or so. So as usual, in this video, I'll take a look at some of the recent news around Plug Power, then we'll come back onto this and look at the technicals in a bit more detail. Hello, I'm David Jones from Capital.com, and I thought this time round on our stocks channel, we'd take a look at the US listed company, Plug Power. It's been a really volatile year for the stock. They're down more than half from the highs we saw in January. So I thought, let's take a look at some of the recent news. Then we'll jump back onto the trading platform and take a look at the charts in a bit more detail. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. And it means we can continue to push out different videos on different stocks during the week. Right, let's get into it and take a look at Plug Power in a bit more detail. So first of all, what do? It's a US company involved in the development and manufacture of hydrogen fuel cell systems as an alternative to batteries in equipment and vehicles. It came to the market in 2002. That's when it IPO'd. It was founded in the late 1970s. And indoor forklifts were the first major market that it had for its hydrogen fuel cell business. Earlier this year, the company announced that it had signed a deal with the major European car manufacturer, Renault. And since then, we've heard that they do plan to make 3 vans together. But they also have quite a bit of competition in this sector. So I think that's one reason why perhaps the shares have been under some pressure. Also not helping it earlier this year was it came out and said that it would restate its financial results for 2018 and 2019 due to some accountancy errors. We saw the stock hit hard on the day it announced that. It did recover during the day, but clearly this sort of uncertainty is never welcome from investors. Its latest earnings came out. They weren't particularly good for investors either. We had the latest quarterly earnings announced in June. The company showed a loss of 12 cents per share. The market was expecting a loss of 8 cents per share. So that was a bit more disappointing than market forecasters were thinking. So the stock peaked at $75 in January of this year. At the time of recording, it's down by 60%. We've had a bit of bad news coming out along the way. And as ever, I think, do we get to the stage now where all the bad news is factored in the price? We have seen a slight recovery. Is it actually a buying opportunity down here? Let's talk about the levels to watch, then we'll jump back onto the platform. So I think the first hurdle on the upside, and despite the recovery, it hasn't got there yet, the 1st of April high, that's coming in at around $37.75 a share. I think if we see that level broken, we could see further strength for the stock price. On the downside, the most immediate support comes in around $28.40. Then we've got support down at $24. But as usual, to put some color on these numbers, let's take a look at the charts. I thought we'd start things off with our moving average, 20-day moving average as usual. Moving averages do a great job when markets are trending. We get a buy signal when the price moves above the moving average, like we had in November of last year. Did a pretty good job all the way up. And we didn't get a sell signal until February, as the price fell below $65. And I have to say, on the way down, it's done a good job as well of containing any rallies in the price until here. So May the 18th was a buy signal. But the most recent signal we've had, just yesterday actually, as the stock fell below the moving average. So perhaps a bit choppier recently because we're not seeing the same sort of swings. But I'm wondering, are we going to see a base being built down here for Plug Power from a charts point of view? If we take a look at the RSI, we had an overbought signal in early June, almost went overbought in later June as the stock pushed towards $35. And given the weakness we've had recently, the RSI, 10-day RSI in this example, is heading towards oversold. I think it'd be interesting to see what happens if it does weaken further and we do see that RSI slip into oversold. The last oversold signal we had was from May, and that did end up, so far at least, being an important low for the stock. So I think it would be an interesting one to watch over the next few days. But let's focus now on the price action a bit more. So the trend had been down, obviously, off those $75 levels, down as low as May, to where it traded in May, $18.40, that sort of area. But we have seen it try to build some sort of a recovery. The price rallied and took out the late April highs, so we did see some strength. So far, at least, it hasn't managed to break the 1st of April highs, coming in around $37.70. And I think it is interesting to watch down here. Perhaps we need to take a look at the shorter term chart to watch for any potential support, because we had seen the price recovering for about 6 weeks. Is this latest bit of weakness just a buying opportunity in this recovery, or actually are we going to see it go back and test those old May lows? Let's take a look at the intraday charts. So if we take it from those lows, the chart looks something like this. The move that we saw July the 6th looked like it was just testing the trend line again and looking to see if we can bounce back up to 36 and beyond and continue this trend. Clearly, that has not been the case. But for me, just because a trend line breaks doesn't necessarily mean that trend is over. So I think we've got a really interesting area to watch now. If we go back to here, to the mid-June lows, just ahead of $28. Clearly, that was important support for the stock, and that's pretty much where we're trading now. So it's going to be an interesting one to watch over the next few days to see if we get a bounce here. And for me, probably only if it broke below $26 to $26.50. These lows from about the 3rd week of May, does it look like that trend is truly over? So from a technical analyst point of view, I think 26 to 28 is really the key support now for this recovery that had been in place since May for Plug Power. It'd be really interesting to see if it can hold above these levels, and can we again see a move that goes back to target at least $32, $34. Interesting stock to watch over the next few days. That's it for this look at Plug Power, to see if it can stage some sort of recovery anywhere near to those January highs. We'll see how the year from here unfolds. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your investing. For more trading videos just like this, please subscribe to our channel.